The next one's going to be on the financial future of the industry, and we actually have a number of panelists that are focused primarily on the venture capital part of the industry. I'm going to introduce each one to come up. First, we'll have Peter Heneghan from Bettor Capital, followed by Mark Robinson of Yolo Investments, Benjie Cherniak from Avenue H, and Per Smith from Pinnacle. Thanks everybody there we go. So I'm gonna start very broad-based and go down the line. Clearly, big picture technology has dramatically changed the way that I would say fans both watch and engage in sports, betting, and broader gambling. And I recognize that technology is going to continue to change, but I guess what is each of your visions for the future of the industry? Just very high level, and we'll start off on this end, and we'll work our way down.
Awesome, thanks. So I think one major trend that definitely see happening over the next few years and even few decades is continued focus on personalization and user experience. And I think that can take shape in a lot of different ways, from the betting apps they've come a long way from even when they first launched in New Jersey 5-6 years ago, but also finding ways to engage different sorts of players. And that could be for people who are very focused on a single sport, a single type of casino game, a single type of gaming. I think that operators are going to continue to find ways to, just like all other consumer apps have, really focus on individual player preferences as opposed to blanket marketing to the whole industry.
Oh, cool. Well, I see big tech as being sort of instrumental in the next sort of 3 to 5 years. Apple for me, Apple Sports, Apple TV, going after live streaming rights potentially. And then moving aside from that, omnichannel. It's something which I don't think's been quite done the right way at the moment, but omnichannel, you've got the seamless wallet, the seamless transaction, the seamless interaction, pretty much the seamless everything, where you're blurring the lines between that. The player can play digital online, they can then take that to the casino floor, and they can transfer the balance there. So I'm really excited about seeing the space in the omnichannel space in the years to come. I see a deal that Caesars did recently with AGS where they created an omnichannel game. So I expect to see more of that in the next 3 to 5 years, certainly. From a supplier side perspective, I think it's more iteration than innovation, personally. But what I am excited about, and that is coming into the market, is more crash games. I think that's where you're going to see a lot of great potential with the crash games, and I think you're going to see some news coming out soon in that sort of in that arena. So the crash games for me, from a supply side, are going to be a big play in the next 5 years.
Great.
Yeah, I think if we kind of look out, if you back up 5 years when we had the repeal of POSPA, and all of a sudden you had sports betting legalized in the U.S. market, and I think and of course we had iGaming coming in much less states, and I think that might accelerate at some point in the years ahead. But I think if we look forward, you look at the kind of the DraftKings acquisition of Jackpocket, and to me it's a bit of a watershed moment, because I really do think we're going to see an evolution towards just a more comprehensive real money gaming and entertainment continuum for many of these operators and entertainment companies that are coming into the space. And I don't think sports betting or iCasino is the end all and be all. I think real money gaming as a kind of entire asset class is where this is headed, and it includes fantasy in some form. Obviously there's some challenges there now with some legislation. It includes sweeps in some form. It includes skill games in some form, and a whole bunch of other contingents that will come into it. So I think that is somewhat of a watershed moment as we launch forward towards the evolution of real money gaming.
All great points. I love being last. I think, but one area that is, I think the personalization is going to be huge in that experience. There's still so much that can be done with that. And then incorporating the RG into that. But content, people's expectations of that content and the experience, that has to evolve. And as, I think that's going to put people ahead of others if they can really crack that code.
That's great. And so last year at this conference, it was much more of a year of belt tightening within the capital markets, both public and it seems private. Would love to hear any thoughts that you have in terms of how would you characterize the funding environment now, and how's that manifesting itself within some of the portfolio companies that you currently own?
Yeah, I think that certainly have seen a focus on profitability from U.S. operators and global operators, and I think that the funding environment definitely remains robust. I mean, you have people sitting up here on stage who are writing checks, and there's plenty others walking around the venue today. I do think that even in a profitability belt-tightened world, if you're able to, as a supplier, show to an operator how you can either increase efficiency or grow revenue, there's always going to be open ears to that. So I think that it may not be as easy as things were maybe 2-3 years ago in late 2020, early 2021, but I think people looking for investment and looking to sell into operators, understanding what their motivations are. If you can go to them and have a very clear ROI story, how that's going to increase their profitability, they're certainly willing to listen to that. So I still think there's lots of opportunity out there for both investors, but also on the supplier side to drive value and cater to what the focus might be of the operators.
Yeah, sure. I mean, I think the Alps had to really tighten their belts and drive towards profit. It just wasn't sustainable for a long period of time. From a VC perspective, if the operators are showing growth and showing that scale, then we're ready to invest a lot more. But I think there's less speculation in the market these days.
Yeah.
And it's actually interesting. You know, Adam Greenblatt came out with his earnings call a couple of weeks ago, and they're going back into investing mode. And you've obviously seen that with their deal with X. Seen DraftKings with Jackpocket, you know, FanDuel with Beyond Play. I think these companies for the next 2 or 3 years are going to go back into investment mode to drive for that future EBITDA targets on that 5-year sort of profit level. So in terms of that, they've had to tighten their belts, but expect a lot more investment in the next few years. And consolidation in the market's inevitable. I think these smaller players are struggling like hell to just sustain and sort of and survive, and this consolidation is going to happen. They buy market share with that consolidation as well.
Sure.
Yeah, for sure, I echo that. There's going to continue to be a fair bit of consolidation, but look, 3 years ago, the prices were too high, right? Like people were raising capital and raising rounds at too high a valuation, and some of the M&A that was going on were at crazy prices that were somewhat impractical. And then it really almost overnight crashed down where everything was almost too low and it was almost impossible to raise capital. You know, we're kind of coming out of the doldrums now. We're seeing more M&A. We're seeing more companies getting funded, but it's at very practical valuations. And I would say that for those that are writing checks, it's definitely still a buyer's market.
Also with, you know, when it was the heyday, if you will, people were getting investment for things that were an idea. Now I think the investors are looking more for the proof.
And not always good ideas.
Right. That's a very good point. But now they're looking for that proof of concept, but also it's not just about the product. It's about the people behind the product, because there's some really good products, but I think a lot of the funding groups are looking and saying, could that person even do more? And so they're looking at not just the products, but also the people behind it.
So that might be a good jumping off point to dive into valuation a little bit. I know that we've got both public and private market participants in the crowd. And I think that oftentimes people, certainly on the public side, probably say, how are they thinking about valuation for some of these private companies that are, you know, pre-profitability? So I'm curious, one, how has that thought process changed? You talked about too high, too low. Where are we right now then? How has your own thought process changed around it? And we can either go with Benjie this time, then go to Peter.
Yeah, I mean, if you're talking, look, I'm more of a private market guy as an angel investor than a public company guy. But generally, what I tend to see is the private markets follow X months behind the public markets. That tends to be the trend. Yeah. And when the public markets fell off a cliff a number of years ago, or 3 years ago, there were still deals getting done at significantly high valuations, and it kind of took 6 months for the private market to catch up. And then now that we're seeing the public markets turning around again and the IPO market starting to return, again, I think that the good news for those of you that have private companies that are raising capital is that it's probably going to get easier following that same trend, and that same lens is how I would view it.
Yeah, I would say that similarly, more focus on the private market side, and I think that it really depends in private markets from what stage the company is at, where for a pre-seed investment, you're not looking at EBITDA multiples and probably not even revenue multiples, but I think as a company matures, it's an important guidepost because they're going to converge closer and closer as you get closer to either a exit to a financial buyer, to a strategic buyer, because what DraftKings or Genius or Radar or FanDuel are trading at is going to inform their appetite for M&A. So I think that, to Benjie's point, there's definitely a lag in the private side, but I think it's also informed by exact stage and scale of the company. And for early stage companies, you're often working back from what is this going to look like in 3, 4, 5 years. But for a mature company that's profitable, I think that the public markets offer a very good guide for where those assets often are going to be invested at or traded at.
So on that, I guess, what are the different pathways you see? You talked about this a little bit, but pathways that you see for exit then today. Do you still feel like it's public and consolidation? Do you prefer one versus the other? Do you think one's more likely?
I think that the three main buckets I look at things in are exit to a strategic, exit to a financial buyer like private equity, or there's always IPO as well. And I think that we've definitely seen as public markets valuations have risen, there's a greater appetite for strategic M&A. Someone mentioned earlier, FanDuel buying Beyond Play, DraftKings buying Jackpocket. I think those deals are just tougher to get done when stock prices are depressed because you're viewing your own stock as much more expensive currency there. And then I think that there is continued financial interest in this sector, and especially as companies start to reach a scale where they are profitable and it looks like it could be a investment for growth equity or private equity. I think that those buyers are always going to be there. And then I think strategics is probably going to be much more informed by what the broader markets are doing because there's a dozen plus major strategic publicly traded buyers who are going to be buying some of the startups who are here today. And I think what's going on with each of those names individually can very much affect their appetite for M&A and how viable a path that is.
And I think you got to look strategically, right? Like the private equity play is the exception more so than the rule within our space, and it's reserved for only the Goliaths of our space, generally speaking. So I think that for the majority of the companies out there, whether they're picks and shovels or B2Cs, typically you're looking at an exit on a more strategic basis. Then again, the public markets are returning, so the thought of IPO, whereas you might have been laughed at a year and a half ago, you wouldn't be laughed at today.
So let's dig into sports betting a little bit. There's been a lot of consolidation of market share this past year. I guess, what do you think has driven that success versus the smaller players? And maybe I'll start with you, Benjie.
I'm sorry, you're asking about?
Sports betting and what's driven the success of the larger players versus the smaller players, and is that sustainable?
I'd love to get your views on this, Paris, but I'll go to you first and I'll follow up.
I thought we had a rule. I'm not.
We can start over here.
Okay, and then I'll
Put
play
somebody
on.
else on the Peter wants to weigh in.
Sitting in the leadoff position here. So I do think that there's massive benefits to scale, especially in sports betting. I think we've seen more individual single state casino operators have more success in sports betting. And I think just the ability to have a deeper technical team, deeper marketing capabilities, able to get better deals with suppliers. I think that there are real benefits to scale on the B2C side. So I think that, yes, the bigger players outperforming smaller players is probably sustainable. I don't necessarily have a view on exactly who those players will be and whether it's 2, 3, 4, 5, 6, 7, but I do think that being the 30th operator in a market is always going to be difficult on the sports betting side.
And I guess as a related question for whoever wants to weigh in next, are there any innovations that you see from either private or smaller players that could influence competitive positioning?
Well, I think that's part of where the third, fourth, and 30th groups are going to have an opportunity.
Right.
Because the major, the top two, they've done a phenomenal job, obviously, but they also don't have that bandwidth. And, there's so many great new innovative products. The problem with those products is the integration time. So, do people want to have a little extra something to bet on, or do you look at the acquisition retention innovation that's out there? And there's so many different things, I think, that are able to help propel some of the smaller groups forward, but it's like, who's going to catch the right next big play?
Yeah, I mean, look, when you look at the segmentation of the US market, these big sportsbook operators, for me, are compliance machines as opposed to UX machines.
Right.
And I truly believe that's where the edge, where the smaller players can get, that's kind of the edge that, and I think they only have to look at the alternative plays that are going on in the market at the moment, the likes of Dabble, Prize Picks, Underdog, the UI is incredible. And it's built for the player, it's built for the customer, and it's built for the customer first focus. So you're looking at some of these smaller players trying to compete with the big guys. They're not going to do it on bank balance and and all that sort of stuff. And like I say, they're compliance machines, but do it on product, do it on innovation, do it on the user experience. And I think that, the problem with a lot of these the players is they don't want to be marketed. They don't want to just be a transaction. And I think that's where some of the smaller players can be. They can make them a part of that journey. They can bring them into their through a community and stuff like that. But I think looking at some of those alternative plays from a UI perspective, actually you can look at how they're building and developing a massive database of players and capturing that as well. I mean, the sportsbook for me personally, as a user experience, as a first-time user, it's incredibly complicated. And there's a huge amount of audience out there that probably feel the same, that don't want to. That when placing a bet, they're probably confused. It's like looking at spreadsheets and everything else. So make it simple, keep it simple, and create a great user experience and market with the players, not at the players.
What I would say is that if there's one thing we've learned in 5.5 years of legislated sports betting across the US or across a chunk of the US is that sports betting is a tough business. And you've got the big two, and they were able to spend their way into relevancy, and now they're all turning the corner to profitability after having spent a lot of dollars. Then you have the ones, your Caesars and MGMs that benefit from the bricks and mortar presence that can help drive relevancy. And for everyone else, it's tough sledding. The unit economics are really difficult. The state-by-state legislation does nobody any favors. The different tax regimes, the compliance challenges, and there's no shortage of dead bodies along the side of the highway of companies that are no longer with us. So if you're a smaller player, you got to know your lane and you got to know what you're looking to achieve. And success certainly isn't trying to achieve. Success, for the majority, won't look like trying to compete with FanDuel and DraftKings on their playing field. You got to bring either a very different approach and a different type of USP, which is what some of the companies like an Underdog and a Bettor are attempting to do. Time will tell how successful they'll be. Or you've got to be a small player who is trying to create a niche within a given state or group of states where you have some brand presence and where people know who you are, or you need to have some sort of a different approach in order to compete.
I guess as the industry has initially been all about customer acquisition. There's fewer states that are ramping at this point, so you're going to pivot to retention. So what are, I guess, the opportunities to improve engagement with existing customers, and are there either businesses or innovation that's happening in that space that you can call out?
Look, I think Peter hit on one of those themes earlier on when you're talking about retaining your customers is how do you kind of personalize this product and make them feel a part of that user experience and look at their habits and really dictate to them. And I think the other component of it is how can you expand and enhance your product offering? Whether it's adding in the lottery component or whether it's adding in forms of iGaming that maybe your competitors don't have. Maybe it's bringing in some sort of a back-end exchange, allowing players to communicate. Maybe it's creating something that's more social. But there's, I think all those things come into play when you talk about retaining customers.
But also, the companies aren't coming up with those things because they're so busy working on the core business regulation compliance, and that's where the startups have that opportunity and the investors have an opportunity to identify, okay, what is something that could really have the biggest advantage for maybe the top one or two, or maybe the bottom guys to help them build themselves up.
That's when they need to buy the companies that some of us are investing in.
Actually, one of our portfolio companies tackles a segment of this, which I think is really overlooked and missed half the time. The company's called Interactive, and it's the player churn. So they're looking at the reactivating of the churn players, and I think that's a bit of a free role for operators, and it's sort of underutilized. And they specialise in that reactivation of the churn players, and that's one area where you can look to keep the retention going. We haven't really spoken about it, and I've kind of been listening to a few other chats, but AI, again, from a retention perspective, I'd love to see more around the AI, and every view for every player should be different. When I log on, it's built for my own personal preference, and I'd love to see more of that innovation and that sort of come through within the sportsbook, and particularly in the iCasino. It's happening a little bit in Europe. It's not so much over here. I mean, classic examples. You only have to go onto the DraftKings website, and it's alphabetical order. I mean, so something like that. So build that around the player and make them part of that journey, and make them feel like they're, again, I said it before, not just a transaction, they're part of the sports book.
A few of you have also mentioned content as being part of it. Media is certainly one element of content. We've seen ESPN bet ramping. There's Amazon getting poached, or having some of their employees be poached by DraftKings. You have, at the same time, BetMGM signing a marketing partnership with X. How will media influence sports betting in the future and vice versa?
I think that it's interesting with some of the more mainstream media brands that weren't necessarily associated with sports betting or iGaming at all just a few years ago, getting more and more into the space, because obviously there's been affiliate activity in this sector for a long, long time.
Yep.
And if you go to lineups.com or any of the other Catena Bettor Collective sites, you're expecting to see bonus offers, picks, and things like that. I think that looking at some of the more mainstream properties, there's been definitely a bit of a pendulum effect where trying to figure out what the right level of integrating betting content is, because there's a section of the audience that doesn't want the broadcast to be 100% about who's covering, who hit their player prop, et cetera. But there is a section of the audience that wants that. So I think that for these companies, figuring out a way to not actually have users opt in, but for those who are looking for it, who feel like this is something that enhances their experience, it's there for them. I don't think we're going to get to a world where Monday Night Football is 100% a betcast type thing. But I do think there's a place for that almost as an alternative. So I think we're seeing some of these companies try different things out and see what works, what doesn't. And I guess it's important to remember for a lot of these companies that gambling is not going to be their main focus. So they want to enhance their core product while also catering to a growth segment. And if you're paying a lot of money for sports broadcast rights, you don't want to alienate part of your audience because they don't like sports betting. So I think that there's going to be a continued balance, and I think the companies are doing a good job of finding it, but it's, I think, a multi-channel approach, and again, towards that personalization theme. So the right people are seeing it, and the people who don't like it aren't seeing it.
I agree with everything you said there, literally every word of it. And, it's a bit of a balancing act for these bigger media companies that are getting involved because they don't have gambling in their DNA, and they don't want to transition from a media company to a gambling company. They don't want to alienate that component of their audience, but they want to engage and take all the benefits that come with it and use it as an engagement tool to enhance the experience. But media isn't just about those big ESPNs, and there's media companies sitting here in the room right now that have great stories to tell, and a number of them that will drive a lot of this going forward with engaging content. And I was just watching the Hot Six, and you see companies like Friday Media, and then there's no shortage of up and comers that are all going to play a part of the story with really interesting, compelling content in which the sports engagement is a big focus of it, and by extension, the betting piece is a part of that as well.
Well, do you think that those will ultimately be integrated within the apps or be separate, the smaller players?
Both. I think it'll depend on which player you're alluding to. It's all situation specific.
Fair.
I don't think as a whole they will all be integrated within the apps now.
Got it. Big media has also had encroachment from big tech. how does big tech, folks like Amazon, Microsoft, Google, Apple, we had Apple as a comment before as a theme, play into gaming? Maybe this is one for Mark.
Yeah, I mean, a couple of years ago, actually, for those who are unaware, Apple made a big play in the online gaming market, and it wasn't through an investment or anything like that. It was forcing the suppliers and the operators to move into their native app. So moving off HTML5 on the web apps, you had to then go into the native. So it was a massive headache, and having been through that in my previous role and experienced that, it was caused no end of hassle and issues. And funny enough, they've now reversed that and allowing the operators and the suppliers to go back to HTML5 and the web app. So that was, for me, that was Apple's first kind of bit of a play in just seeing the adoption and seeing the downloads and seeing the numbers and the data. And funny enough, they've launched Apple Sports, which is a free-to-play data feed, and they're given information like that, which I think they're deriving the feed, getting the feeds from DraftKings. So, I mentioned it before about Apple TV and streaming. These big tech companies are so prevalent and everywhere, and I think that what they can influence, they have greater access points and greater touch points with everyone and the consumers, particularly iOS and particularly Apple. I mean, circa 80% of the total online market is on iOS device. So, there's a lot of opportunity for them as well.
Another area that we've always been watching has been social as it relates to sports. I guess what interesting technology or innovation do you see to help facilitate the social aspects of watching and betting on sports?
I think it's hard because, like, for example, esports, you can watch it on Twitch. There's TV kids or people, I guess, that are in their early 20s, they don't even watch TV. They don't have their cable network. They just look at they get everything that they want off the computer.
Yeah.
So I think, it's harder when it's not harder, it's actually easier because there's so much accessibility. But to say, we're going to sell those rights, everybody has access to those rights. Is that the area that you're...
Yeah, I mean, within the social element, gamification and community for me are two really key things that I'd love to see in the social play. And something which has not really been perfected in, for enough, FanDuel just bought the Beyond Play, which has a multiplayer, but a holistic multiplayer built into the casinos where I can see what you're betting on, you can see what I'm betting on, we can share the experience, we can then just that community, we can go to the blackjack table, we can bet there, we can then bet on 88 fortunes, we'll put $100 here and then we'll share the winnings. So that sort of social multiplayer element has not really been perfected, and it'll be really, but it's holistic, not a bolt-on in that respect. So being able to have that social aspect, and which again comes back to that community and creating a community and making the players feel like they're part of the journey with the sportsbook.
One area or one constituent that we haven't talked a lot about is really the leagues, who in some ways create the content that everybody's kind of leaning on. How are you seeing them partner or help drive innovation across the space? I'll start.
So I think that, I guess on what I was talking about earlier on integration of betting content with mainstream media, I think that that's one area where the leagues are going to have a significant say, because they don't want their product to just be fully gambling-ified, if that's a word. And then I also think that you see the leagues looking for ways to continue to engage their players, whether it's looking at free-to-play games or just betting adjacent products, whether it's within the league apps themselves or just around content. I mean, the NFL knows how big fantasy football is, and there's red zone and there's fantasy zone. And so I think you've seen the leagues inching closer to trying to appeal to those consumers, but I still think that the leagues are generally seem to be figuring out exactly what they want their strategy to be and how close they want to be with the gambling companies, but also the gambling product. And I think there's a slight difference between having a DraftKings ad up somewhere and then the NFL actively talking about what type of player prop should be offered or things like that.
Right.
I mean, one thing's for sure, the leagues want to make money out of this deal, right? That much is, to be perfectly honest, even before the PASPA repeal, some of the leagues went and did deals with Sport Radar to give rights to their data to be used for betting purposes in jurisdictions where betting's legal, maybe not in the US, but elsewhere. And then, of course, once it was legal in the US, they wanted to monetize that to the maximum extent possible. And I remember those early years, a number of the sportsbook operators were up in arms, and maybe some of them still are, regarding the actual cost of the data rights to use the league's data in conjunction with via their distributor, which would be either a Sport Radar or a Genius Sports. And there's still a number of points of contention relating to that. But then within it, you have the element that you're alluding to, Peter, which is that the leagues have to be careful in terms of how it's portrayed. There's no question they've come a long way in that capacity, but we are seeing a number of partnerships, not just teams with betting companies and leagues allowing for there to be official sponsors, but with leagues actually investing in some of these companies. And you look at a company like an investNEXT, which is now partnered with the NBA and being in part funded by the NBA to help create micro betting products. So, there's definitely a dichotomy in terms of how they're converging.
Great. Let's maybe shift to iGaming. This is an area where legislation has really stagnated. But I'm curious to hear, does anything change that? And on top of that, maybe you can talk to what maybe you've seen that's worked or not worked within the iGaming space, and I don't know if anybody wants to start off on this one. We've got somebody leaning back over here. Not me this time.
You're leaning back there if you want to.
I'm happy to start. I think that there hasn't been.
You're batting leadoff.
I think that what has and hasn't worked. I think the main thing is to draw a contrast to the sports betting side, where the leagues. I think land-based casinos were more aligned with sports betting. I think the general public. I think that getting the right level of constituents in a given state to all align to pass iGaming, I think is just shown to be much more difficult than on the sports betting side. And I don't know exactly what changes that. It probably depends on the individual states, but I think that's what we've seen. It's 40-ish states versus 6 or 7 total.
Yeah, and I also think that, with the stagnation, as states struggle to regulate whatever, the market will find ways to work around it. And I think that's why you've seen the rise of the sweeps, the DFS, and the pick'ems, because they're finding alternative ways. But it's a real shame. I was really excited about this year, and I thought New York might pop, and you're hearing talks of Indiana, Illinois, Maryland, Rhode Island's just gone live, although it's only monopolised by Bally's. I've heard talks of Arkansas, through Bet Saracen, sort of lobbying hard for that. But I read a really interesting stat that I think about 511 billion of illegal gambling went out of the country last year, through sportsbook and through iCasino. So I just wish they'd hurry up, and I think the companies feel the same too. We need new states. We want growth. It's been stagnated for too long now. And and the New Yorks, Indiana, the Illinois, the Marylands would just add so much value, and it would give so much back as well through the taxes. There's so much money leaving the country that is not taxed, which I do believe should be, which can then help be brought back into the community, brought back into the local states, and it'd just be nice if they could all lobby together and actually just decide, as opposed to so many people having different views.
Since you brought up Pick'em a little bit within that answer, certainly there's been some shakeup with some legislation recently. Like, what do you think the future of that industry is, or those business models? Do they have to evolve in the current landscape?
Yeah, I mean, it's a time-limited opportunity, I think, with the likes of the Pick'ems, the sweeps, and that the regulation is coming, and they're already with Pick'ems, for example. That it's not like they're in every single state. So,
right.
But the product is phenomenal, and it's built for the customer, and it's built for the user, and yeah, it's same with sweeps. There's a lot of talk and a lot of hype at the moment about it, but a lot of these guys they're making hay while the sun can shine.
When you say the product is phenomenal, what specifically about the product?
Well, I just think the UI. I think the just the user interface of it. Shall I say, like the customer experience? It's a community feel. It's more social. And you're targeting a different segment of an audience. You're not targeting the hardcore sports bettors. You're targeting a lot of the Gen Z coming through, these young people coming through
Right.
who don't understand sports betting and don't understand and want to play, want to feel like they're a part of it, but are used to that social element as well. So, and that's why and the adoption rates and the numbers and the retention rates are only growing, and I think you've seen that with Dabble. So yes, time limited, but these, these guys have the skill set to be able to adopt, pivot, navigate. They work around the legal framework. But personally, I'd back the innovators over the sort of the regulators in that respect.
Yeah.
With the regulation, I was hoping that the sports betting would set the tone and show the proof of concept that, it's huge. The volumes are massive, but yet there's so much still going offshore. And with the sweepstakes and all those, solutions that are out there right now that have found a reasonable solution, I think that they're actually helping that transition even more so, in the same way DraftKings, FanDuel were helping on the, on their side. But there's activity, and they will pivot nicely when iGaming comes into play. But without that regulation, they're still going to. So now there's 3 boxes of the iGaming, the sweepstakes, then what will hopefully be regulated sooner than later, and the offshore.
But bring them all under one umbrella. I mean, tax them. They don't mind it. Tax them, generate some money back, bring it back into the local states, create a framework or regulatory framework which allows them to exist more than what they currently are. Because it's the more of these products, the more competition. It's only better for the consumer and only better for the player. You're giving more options, but that money then again is still going outside the country. Tax it, make sure it's used.
Yeah, I mean, it's a separate topic, but whatever
Exactly,
whatever you don't regulate is just going to go offshore, right?
Exactly.
So to me, whether it's Pick'em, all of these different contingents, find a structure that works, find a way to regulate it, get iCasino regulated. If you don't, it's just going to go offshore, and that's what it is. It's just the reality.
Maybe pivoting again, a lot of what we talked about was B2C. Certainly it seems like as consolidation has happened, maybe there's an opportunity for more even B2B. I guess where does that make sense and where does that not make sense looking across the broader industry, whether it's gaming, sports betting, any tangential areas?
Look, as someone who invests in companies, B2B to me makes a lot of sense, right? And you spoke a bit earlier about how the bigger gaming companies can't just build it all from within. So the solution comes from B2B. And I know that you guys as well are a big proponent of B2B versus B2C investments. For B2B companies that are providing the picks and shovels and supplying the bigger players in our industry, there's a path there, but there's also a number of challenges, and the challenges relate to timelines for integration and punching your way to relevancy and going from an idea to building a product as you raise capital, and only a very select few B2B companies will become the next Sportradar or the next really massive supplier to operators, be it sportsbook or casino, right? So, I think within it, you have to have reasonable TAM expectations. And I think from whether it's the public or private markets, the upward TAM of the B2B companies is generally smaller or potentially significantly smaller than the upward TAM of a B2C company, but the path to success might be something that could be more predictable.
Yeah, and I think we are solely focused on B2B, and I think echo everything that Benjie said. I think that scaling a B2B business is hard, but I think it's probably still easier than scaling a B2C business because you're not competing directly against DraftKings or FanDuel or anybody else for marketing spend. And if you're able to deliver a strong product, I think operators it may take them 6 months to integrate. They may say, come back to us next year, we're busy, but I think they're going to be interested in hearing what you have to say and checking it out. And I think that even as there's consolidation, there's always going to be opportunities to innovate outside of the behemoth organizations that are the tier 1 operators across the world. And I think a lot of that innovation is going to come from B2B startups, scale-ups, B2B suppliers across the ecosystem.
But what are some examples of that? Like, I guess, is that mainly, because a number of these companies, whether it's DraftKings or FanDuel, have brought some things in-house. They want either whether it's trading and risk management or how they build parlay products, but what things are still out there where you'd say, this makes sense for a B2B to be outside of these big companies?
I think there's areas of expertise. So, let's use esports as an example, even though it's not really talked about that much anymore. But esports risk management that's the critical component to make money. And it's very rare that people have that capability to manage the risk of the esports. So that's something from the B2B perspective that could be, brought in. Anything that creates more profit is something that will be seriously considered from the B2B perspective. Having additional is one thing, but more profitability guaranteed is another.
Yeah, in the US, there's going to be more suppliers coming into the market than there are going to be operators. Hands down, that's for sure. It's an easier entry route, although it's still incredibly expensive. But these independent slots and studios are going to find it hard to find that and build that footprint as well. But in terms of where the market's going, there's certainly going to be a lot more suppliers coming into the US market, a lot more European suppliers. That route to market and how they get in there, that's a difficult part. That's the expensive part. But there's a challenge there to be overcome.
Awesome. Well, we are right at time. Next up, we're going to have the leagues, but please join me in thanking Peter, Mark, Benjie, and Paris. Thanks so much.
Thank you.